Hello to everybody and welcome on my YouTube channel. Today we will go through level 1, my trading academy. This is start into the world of the trading from the beginning. We will start with charts, markets and types of trades at the basics level and look at how to trade like professional. We will go through 6 lessons today: type of trades, type of markets, types of trading style, types of chart, types of trade and others, and analysis. At first, types of trades. Who is trading on exchanges? On exchanges are trading banks and financial institutions. One of the biggest players on exchange market. Banks trade mainly stocks, commodities and forex. Banks are not interested in trading crypto, but in the last day I think banks starting to trade cryptocurrencies, so they will also trade crypto soon. Hedge funds. This trade using money entrusted to them by people who work in retail or smaller companies. Hedge funds can be controlled by a team of traders or one highly experienced trader. And next, whales. This type of trader has a lot of money or influence to change the market to their advantage. These traders are trading on small markets like crypto or the stock market. They are manipulating with the market, which is illegal. Whales can use their strong influence on social networks, for example Elon Musk with Dogecoin and Bitcoin. And the last are retail traders, which means it's one person who sits in front of computer or laptop or trade on mobile phone and have some smaller capital. Second, types of market. Forex. This is the market for trading fiat currencies. Everybody has been a forex trader, for example, when you were going on a holiday to another country and you will have exchange your money to foreign currency. Banks, big companies and small numbers of retail traders invest in this market. Next, commodities. Most commodities that we know are traded on exchange market. For example, you can trade oil, meat, corn, gold, silver. Banks, institutions and producers of commodities usually trade on this market. Next one, stocks. On the stock market you are buying part of company. Hedge funds and retail investors trade in this market. Stocks with dividends are always a good choice for investment. I mean, this is good for long-term investment. Next one, index. This is a package with many companies put together, for example S&P 500. And the last one, crypto. The first and main crypto is Bitcoin. Bitcoin was founded in 2009. This market is still young, but has become very popular. High volatility is advantage for traders in this market. Third capital, types of trading style. Every trader has their own trading style and preferred timescale. It doesn't necessarily mean that you should have only one trading style. You can compare many trading styles. For example, you can complete short-term trades on daily basis on the crypto market and also investment long-term on the stock market with longer time frame, for example years. To choose the right strategy is important to set up your goals. There is a tip for you. If you are not interested in being a professional trader and it will be only your hobby, it's better to trade on a long-term time frame. Here you can see this is a table and there are strategies and there are things what you use in this trading. Please go through this table and it will help you to find your trading style. Fourth capital, types of chart. On the chart you can see two axes. Price is usually on one axis and time on another. Trading charts may also have another values, but we will use only time and price. Below you can see 4 charts, but there is different chart style. For example, here is line and here are candles. What is a candle? Candle you can see here. About candles I will talk in next video, but now I will introduce you two types of candle. Candle rising, it means price is opening here and closing here. This is the low of this candle and this is the high of this candle. Candle falling, it means the price goes down and open here and close here. Note, each time frame has its candle: 1 minute, 5 minutes, 1 hour, 1 day, etc. Types of trades and orders. Spot trading. What is spot trading? For example, I buy one apple in the shop for $1. I will come home and on the way I will meet my neighbor who likes apples and offer me $2 for sell it. I sell the apple and I earn $1. Owning this apple didn't cost me anything, just had to find counterparty that would pay me more than I paid. We conduct such trades on shares on cryptocurrencies. We only make a profit when we sell our assets to someone who is willing to pay more. A loss would only occur if we sell the asset at a lower price than we bought it. This type of trade is suitable for newcomers and investors with long-term horizon. Next, future trading. This I will explain you later. But from this video I will note only long and short. Long in future trading means I assume the price will rise, and short I assume that the price will fall down. So it means you can earn money also in downtrend. Here I have some few words what you will need in your trading. Take profit. It's a place or amount that determines our goal to exit from the trade. Stop loss. A place where we end and trade if it does not continue to lose more than we can accept it. Trailing stop. Market order and limit order. I will talk about this later. The last chapter of this lesson is technical and fundamental analysis. What is technical analysis? It's analysis based on the chart. The movements of the chart are given by human interaction and there is a high probability that what happened in the past will repeat in the future. The technical analysis is based on psychology of market behavior. As people trade in the market, movements are often driven by emotions. Details of technical analysis will be presented in following level 2. Fundamental analysis. It's analysis based on documents and information about the asset whose price we trade. For example, we know that gold is precious metal and it's hard to mine it. This fact gives gold a certain value. If we know that it is no longer possible to extract more gold, we will assume that price will only rise in the future. In the stock market, for example, the company's price affected by company's results. What is different between two types of analysis? Technical analysis is more important for short-term trading. It's also suitable for long-term trading, but many traders combine the elements of both types analysis together. It's therefore not possible to say which analysis is better. That's all for today and I thank you for watching. I hope you found here lots of information for you, and if you would like to join my Telegram group, you can click below this video. There is a link